After completing its fifth wave movement to the downside yesterday, Bitcoin had a break to the upside. In fact, it broke out of most of its structures. Let's jump down into the world of Bitcoin, reviewing the price action of what is going on here with BTC and where I think things are going to be heading next. As I get into the video, if you find it useful and informative, smash the like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. If you haven't yet joined us in Discord, what are you waiting for? Check it out. Link is in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. So why not go ahead and check it out? Let's jump right down into the video here for Bitcoin. So here we have BTC paired up with USDT on the 𝗕𝗘𝗪𝗔𝗥𝗘 exchange 1 hour time frame. Okay. Now, following on from yesterday's video, we were talking about this move down here towards 28,577 to 28,668. We can see that we wicked down to the low of 28,588 to the penny, because Binance loves everything to the penny. You can see it's right inside our yellow box, right onto the very edge there. Then we got this big break to the upside. Now, the interesting thing about this is we were thinking about this idea of 1.618. That's been avoided, and we got this break upwards. That basically means that this is just a complete structure right inside here as a zigzag pattern. So we're just going to go ahead and mark this in, and it is complete. We don't have to worry about anything else. Yeah, basically, we're done. We had the breakdown from our higher highs and higher lows as expected. And actually what we've gone and done, so I bring this one up, is where we were coiling up into this little descending wedge. We've got this break outwards. Okay, so this is our daily time frame. You can see that we were coiling up. We pushed right the way back down to the lower trend line, and then we've broken out above the upper trend line. Okay, now we're above the 50 daily EMA as well. Things here are looking reasonably positive, at least for the next few days. I don't think it's going to be overly long-lived though. Jumping back to our hourly time frame, you can see that we've left behind a few fair value gaps. Now, fair value gaps, these are created from an imbalance in the order books. Essentially, if there is too much buying pressure and not enough selling pressure, because there's always got to be a seller that's going to be selling Bitcoin to the people who are looking to buy it. And if there's too many buyers and not enough sellers, as in not enough Bitcoins are being made available for sale at these prices, the price has to jump to where the sellers are. Okay, so as this kind of pumps up here, large buy orders are coming in, forcing the price up to the higher ranges to find the sellers. And the same thing here. So there's two fair value gaps that were created in the last few hours that are quite interesting. And now we talk about fair value gaps quite a bit on the channel because it's the idea of tracking big money. Okay, we don't think of this as a collective large number of retail investors all buying at the same price. We think of this as a large player with significant funds that are able to move the market. Okay, the likes of, I don't know, let's say MicroStrategy, BlackRock, those kind of people, right? Big money coming in and moving the market. And so smart money leaves behind what they call fair value gaps. And so if we follow the smart money, what do you expect to see once a fair value gap gets created? Well, normally you would expect price to want to cool off and come back down and put liquidity where liquidity was not. Okay, so liquidity was not inside these fair value gaps, so price wants to come back down and put liquidity back in there. Okay, retail investors like to come and fill those gaps out. And so these large buy orders will cool off. They don't just stack up. So we've got two stacked up here, and we've got this one from down here as well. Now, typically, you don't tend to see these things continuously getting stacked up, unless, of course, there's a drive to push price into significantly higher values from those smart money investors. Okay, so it's always possible. We saw this way back in the early stages of 2023, where we're seeing fair value gap stacked on top of fair value gap. Okay, now typically it's an illogical thing to do, because if you're buying a large amount of Bitcoin for the purpose of actually holding it for the long term, for example, as an investment choice, then you're not going to want to continuously pay higher prices. For example, here we can see that buy order was placed at 28,988, yet they paid 29,210, right? And then, of course, we can see that another buy order was placed at 29,246, but realistically, they wanted to pay 28,988. So why are they continuously stacking up their buy orders and paying higher and higher prices when we know that the logic here is that once a fair value gap is created, price wants to come back down and fill it out, right? It's not a guarantee, but it's pretty highly typical that price likes to come down and fill those fair value gaps out. So why would you start stacking fair value gaps? Well, that becomes a strategy that the smart money tends to adopt, which is to drive price higher and basically continue to drive price higher and drive it even higher so that it creates FOMO. Okay, and that FOMO basically means that there's liquidity getting created at the higher price levels, and as that liquidity that gets created up here is basically retail buying. That can then be used to exit their positions that they were buying down here. So example, so if they were playing all of these kind of cheaper prices here, price comes and gets pushed all the way up here by retail investors, and then the next thing you know, you end up with a big move to the downside. Now, that's one strategy that gets adopted from time to time. It's quite an old one. It's been around for quite some time. And, you know, it is what it is. Same along with fake orders that enter into the order books as well. So you have to be a little bit cautious. But for the most part, we completed structure. We can see that here. We've broken upwards. And yeah, for the most part here, I don't think there's terribly too much more to it. We are, of course, still in lower lows at the moment. If we were to kind of look at this across a larger time period here, we've still got to break upwards of a few of these before we can truly say we've broken out. It's broken some of these existing ones, but we've got to really think about these two up here. Realistically, we're going to be looking at breaking above 30,500 to really get some confidence in this one. But like I said before, right, I still am targeting out the CME gap, okay, up in our daily time frame. Let me see, there it is, up here at the 34,455 to 35,180. So I was still expecting this break to the upside. You can see that we've found support on the 50 EMA on the daily. We're looking for this upward move, and we're looking to kind of finish off that or grab that CME gap. Once completed, once we have had this break upwards here to that CME gap, my expectations are that we come down to the CME gap that's down at 20,330 to 21,110. A lot of people don't think that's possible, but I think it definitely is. The one that's a little bit off though, guys, is there's a CME gap all the way down here at 9,925 to 9,735. Now, there are, across all of Bitcoin's history, that as far as I can see here, only these three gaps, which means all other CME gaps in Bitcoin's history have been filled out, except we have 3 remaining. So the question becomes, are we going to hit them all? Are we just going to hit one? Are we even just going to hit 2? Maybe people are thinking, yeah, we're not coming down to the 20,000. All we're going to do now is go up to the moon, right? And therefore, we're going to have to say, okay, well, for the first time in Bitcoin's history, we're going to leave behind a couple of CME gaps like this, right? Possibly. Yeah, we can't rule it out. But when I take a look at the chart here, these are the only 3 that remain unfilled. So, and there's been a few of these, right? And sometimes they take a long time to play out, right? As you can see, the CME gap over in December of 2020 didn't get filled until 2022, right? A couple of years out, or more about 1.5 years out. So it's important that we reflect on the fact that, well, most of these gaps have been filled. We've got this one down here that was created from July 2020 that still hasn't been filled. And of course, we've got these 2 here that are more recent. And I suspect that these are likely to get filled, even if it is the 35 to 20 and then to the moon. You know, there's no guarantees that we come down to the 9,000, but I do find it an interesting point, specifically when we start actually drawing the curved lines across the time frames here. If we actually take a look at this one, I'm going to show it on the dollar value. Okay, if we draw it on here, for example, you can see that we take all the existing lows and we take all these existing highs for Bitcoin's history, and actually it just seems to very randomly stopped in the middle of our lines, right? If we go down to the lower level here, then on the dollar value, this is around $12,000 to $13,000 USD, but on the USDT value, it's actually around the $9,000, $10,000 level. Okay, so it could be that actually there's an interesting point to be made that maybe that CME gap at that low level does get filled out when we actually start reflecting on what's going on at a macro level like this. So I think we can't rule it out. It's an interesting kind of break to the upside that we've had in the last kind of few hours or so, which is great to see. But you know, my expectations have always been that we push up towards that $35,000 CME gap before we go down. So we can see things were coiling up quite nicely. We can see they were coiling up on our daily time frame here. We were talking about this for a while. You can see that we have the lower lows and the lower highs. These break upwards, and you can see this here coiling up as well. Again, lower highs and lower lows breaking upwards, and we've had the break. We'll look for the test, and then we'll continue this run. I think it's a little bit hard to see if this is going to completely break out or whether this is a fake out. the reason for that is our momentum indicator has really shot up, and that's an indication of not enough demand to push up the price whilst we had the upward directional move. It's basically showing us weakness within that price action. So I'm a little bit cautious on that one. Let me just check the divergence indicator. We had the bearish divergence. That was obvious there anyway. So nothing else on that one. The RSI is in an okay spot. The volumes are incredibly low. Let's go just reflect on things where they were previously to where they are now. Right, you can see that volumes are just non-existent, and it's an indication that things are bearish, not bullish. Although I want to see that $35,000, and I do think that is a likely scenario here, we have to also consider the fact that the stochastic RSI, which is a momentum-based indicator, and it's basically using volume and price action to determine whether or not there's actually any momentum behind the price, is indicating to us, along with the volume profiles here, that there isn't actually any momentum behind an upward directional move, and therefore it looks more and more like it was a liquidity grab or the idea of trying to create FOMO from absolutely nothing. So I'm a little bit cautious when it comes to that kind of stuff, and yeah, it is what it is for now. Now coming over into, I think, this chart, if I bring this to the daily, let's bring this one up here. So what I want to do here is I want to take a look at here. You can see that we're right up in this area of low volume. It's basically an area in the price chart that just doesn't have much going on in it. And you can see most of the volume profiles are down here, basically quite reasonably low at the kind of $22,000 to $24,000 range. Right, that's where most of the volume is actually coming into the market. Where we are right now, not a lot. So there's a little spike up here at the kind of 30,500, but for the most part, not a lot going on up in that higher range. You can see most of the range is down here at 16, but not a lot up in that higher range. So it's interesting to kind of keep an eye on that as well. But for the most part, if I throw on the HTF liquidity, you can see there's a pockets of liquidity up here, and that could be the grab that people are looking for. Lots of stop losses up at the $31,000, $32,000 level. Yeah, for the most part, it doesn't look overly too juicy, so I'm not too concerned about that order block wise. So sell orders are out at 33 and 33.5. No real buy order blocks. They're all the way down here, which is 14, which is a new fresh low. So interestingly enough, guys, you can see that there's not a lot of kind of on the order block side of things outside of these ranges. So at the moment, we've got sellers up here at 33, and we've got buyers down here at 14.5. So yeah, it is what it is. We'll see how that kind of plays out over the next kind of few days or so. But for now, I think that's going to kind of wrap this video up. If you found it useful and informative, smash the like button. I do appreciate that. If you are new to the channel, subscribe. If you haven't joined us in Discord, what are you waiting for? Check it out. Link is in the description down below. Until the next one though, guys, have a fantastic day.
We are not financial advisors. None of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.